just maybe, there's some good news on the horizon for shoppers. The British Retail Consortium's latest report on food price inflation in the UK showed that overall shop price inflation eased to 1.3% year-on-year in March, the slowest rate of increase since December 2021. Non-food inflation retreated to just 0.2% year-on-year, and even food price inflation slowed to 3.7%, and while higher than maybe we'd like, that's still the slowest rate of increase since April 2022. This all chimes with the trend shown by the United Nations Food and Agricultural Organization's own food price index. The global UN survey is showing that food prices are just over 10% lower than they were a year ago, although the rate of decline does look to be bottoming out. Note that of the sub-indices, meat, dairy, oils and cereals are all down year on year as of February 2024, while only sugar is higher than it was in February 2023. It may therefore, in all of this context, be timely to look at the UK grocery sector. The grocery delivery joint venture between Marks & Spencer and Ocado has just released a trading update that showed double-digit percentage sales growth for the second time in a row. Or we've just had some first quarter results from the privately owned Morrisons that showed the best like-for-like sales growth there in 3 years. More pertinently still, market leader Tesco is scheduled to report its full-year figures to the end of February on Wednesday the 10th of April, and Sainsbury's will publish its full-year numbers to the end of March on Thursday the 25th of this month. To zoom in on Tesco, it shares a near a 1 and indeed a 10-year high, which may leave the firm open to some accusations of price gouging and profiteering, especially as food price inflation is now easing, as we've just discussed. However, raw materials aren't Tesco's only input costs, as it has utility bills just like the rest of us, and it'll also be paying higher salaries, so it's not all milk and honey for the grocery firm. This is particularly the case as competition in the UK grocery industry remains fierce, and as a result, Tesco continues to emphasise the benefits of its price match and club card offers to customers in what can be a difficult balancing act. Aldi and Lidl continue to make inroads, and their discounting will be keeping the bigger players on their toes. The latest market share data, released by consultants Kantar for the 3 months to mid-March, showed that Tesco's market share was up slightly year-on-year and unchanged compared to March 2019, pre-pandemic. Sainsbury's is also holding its own, but Asda and Morrisons are having their share of the grocery pie gobbled up by the discounters. When it comes to Tesco's full-year results for fiscal 2024 and any guidance for fiscal 2025, analysts and shareholders will look to 4 key data sets. The first is like-for-like sales growth. January's Christmas trading update revealed 6.6% like-for-like sales growth across the third quarter, so that will be the benchmark for momentum in the fourth and indeed across the year as a whole. The UK in the third quarter was up 7.9% year-on-year, wholesale's business at Booker was up 3.9%, while Central Europe was down a fraction. Watch out also for the trend in online sales. The second headline number is operating profit. Alongside April's results for fiscal 2023 a year ago, Chief Executive Ken Murphy offered a forecast of broadly flat adjusted operating profit for the retail business of £2.5 billion, with Tesco Bank expected to add 130 to 160 million to that, again broadly flat. However, Mr. Murphy upgraded that guidance alongside the Christmas update in January, so adjusted retail operating profit is now expected to be £2.75 billion, against £2.6 billion a year ago, with the bank still expected to throw in 130 to 160 million on top. For fiscal 2025, current consensus is for total adjusted operating profit of £3 billion. The third number is operating free cash flow, where Tesco has an annual target of generating between £1.4 and £1.8 billion a year, but Mr. Murphy has again upgraded expectations for the year just ended back in January to £2 billion. And the fourth is cash returns to shareholders. Tesco is currently running a £750 million share buyback to add to the £1.05 billion returned by this mechanism since April 2021. The firm also pays a dividend. Tesco declared a flat interim payment at 3.85p a share, but analysts have penciled in a high final dividend to take the total for the year to 11.5 pence, up from 10.9 pence in fiscal 2023. A further increase of 12.75 pence a share is expected for the year to February 2025. I hope that you and your families are in good health and good spirits. Thank you for watching, and I look forward to seeing you again next time.